around for about 3 months, but then leave office. The British pullout will restore some sovereignty to the British government and more control over issues like immigration. But the uncertainty of leaving a long-standing financial partnership is shaking investors and causing big sell-offs in the world's financial markets.
Here's a live look at the stocks as they open right now. Let's see. Can we see here? The Dow
We're just
is
about 30.
down 241 right off the top. And we will keep checking that throughout the morning.
And Terry Savage is keeping her eye on it. You of course know Terry Savage, Savage Truth About Money, going to join us and let us know what she thinks. Are we still at about 240 points down, Terry?
Robin, what's happening is they don't all open instantaneously, especially on a big gap down day today. But the futures markets were down 500, and so you can reasonably expect when all the trading catches up and gets averaged and posted that we'll see a market down at least that much. And I'm glad I'm on the phone with you because, this is a wrong time to panic. There's good reason for the sell-off, but this is not a good reason for you to go dumping your stocks into a panic.
So, Terry, how does this work? We keep hearing that it's going to be a slow transition. So why the dramatic swings right now?
Because this was so unexpected. The bookies got it all wrong, too, in London. They're probably the ones in the most trouble. But the fact is it was generally unexpected in the financial world that this would happen. It's a major disruption in the order of the world, forget the British government, but world trade. Euroland is maybe the second largest economy in the world, and the idea that Britain would leave it and disrupt things, as you're right, it will take 2 years, but markets hate uncertainty. One of the interesting things about it is that the British pound has fallen dramatically to a 30-year low. People wanting to escape from Britain, they've brought money to the U.S. dollar, which is soaring, to the Japanese yen, a country that doesn't want a strong currency. They want a cheap currency so they can export. And it's gone to gold, which is up $68 now to $1,331 an ounce. Everybody wants out of Britain, and European stocks are suffering too because nobody knows what this disruption will mean to the future of the Euroland. So I just want caution, though. If it's your 401k account or your mutual fund, remember, if you put in a sell order at 10 o'clock in the morning because you're scared, you're going to get the closing price. It's going to be a horrible price. So you don't want to do that today. Next week could be bad, too. There'll be margin calls on all the big traders. The markets will be very volatile for a while. But if you're not retiring tomorrow. You don't have to withdraw from your 401k. So sit back here while this sorts itself out.
All right, so we're talking a couple weeks. You think we're going to see a lot of volatility. In the meantime, boy, I guess it's a good time to go travel to Britain, huh?
This is your chance to buy tickets to anywhere in Europe, as a matter of fact, because we're strong against the euro, anywhere except Switzerland, perhaps, another safe haven for money over there. Yeah, this is your travel opportunity before the hotels repost their prices.
But I think people are looking at this big board, Terry, and they're freaking out, I'm sure. They're seeing it's down 500 points. We're only 3 minutes into the trading day, but you say it's just going to be a crazy day and leave it be.
It's going to be a crazy day. Next week, it looks like we'll be even worse. Over this weekend, it's going to be a tough time for many big traders. There are going to be margin calls. So Monday could be even, I think will be an even bigger down day before this gets sorted out. So I understand why you're all going, I'm never letting this happen again. My whole retirement account is not going to melt away. But today, tomorrow, next week are not the times to be doing something about it. In fact, I'll give you this optimistic thought before we close. Where's all that money going? It's coming to the U.S. It's smart money. It's not going to sit there in bank CDs at interest rates of 1/100%. A lot of it probably will come eventually back into the U.S. stock market looking for dividend-paying stocks and things like that. So there's a slight silver lining, but in the meantime, there's uncertainty, volatility, and this is not when the average investor needs to be in there making decisions.
All right, Terry Savage. Thank you, Terry.
Thank you.
Thanks, Terry. Here's a look at some of the other stories making